Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, February the 17th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. This is a subscription room. Each morning we come together, we take a look at the market, macro to micro. We take a look at the structure of the market, what our trade levels are going to be, what our hypotheses are and targets are for the day. Then during the course of the trading day, we do live trading analysis and live trading. If you'd like to come in for a free trial, I'll put up my contact information in just 1 second. But before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. There is no website, so if you want to get a hold of me, simply send me an email at quantumleapfutures@gmail.com. You will need Skype. It is easy to open up and easy to send me a contact request. It'll take about 2 minutes, and send me a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. There are many days of this pre-market session. We do this each morning before the market opens. There's over 300 days of these sessions. You can see what we do each day, what our hypotheses were, and then how it played out against the market. If you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday we were talking and we were looking at the fact that we were back in that value area, that microcomposite value area. And our warning line for possibility of going down and back towards that 48, our first target was 64.75, was the 1870 area. We came down to the 1870 and a quarter, and just put a double bottom in, and then we just rallied, and we came up and sort of chopped around at the top of the holiday session, right at our trade level here, between 83 and 87. 86.75 was our target there, and then finally we moved up to the 1890. And the hypothesis yesterday is if we got to 1890, which is the microcomposite VPOC of that balance area that I'll pull up in a minute, that if we accepted that price, we should go and test the 1905.75 target. They got up there and they tested the overnight high, but they just couldn't get away from that magnet. Overnight, we went up and tested 1905.75. In fact, our overnight high is that 1905.75 to the tick. So structure is playing out very nicely. Today, if we have a positive day today, it'll be the first time in 2016 that we had 3 consecutive days. And I'm not counting the holiday session on Monday. It'll be the first time in 2016 where we had 3 consecutive days of gains. So it should be interesting to see how it plays out. Each morning I start my day the same way, same chart. I've got this paper money account through Thinkorswim for one purpose, and that's to follow the internals and to look at the different time frames of the market. And I use a 9 EMA and a 20 SMA and a simple candlestick chart. What I'm looking for is where are we at within the trend of the different time frames. And I start with my monthly and I work my way down. I do this because I don't want any bias of one particular direction. I want to see where we are in the trend in the different time frames and see if I can identify structure or areas of weakness. You can see that that we had great slope and separation on the monthly, and then September, August they tested below. October, November they took it back. December we tested it again. In January we failed, and so far in February we failed, and we're starting to see violation of the upward trend on the monthly. On the weekly, We actually have the start of a downward trend. We are incapable of getting above the 9 EMA. We've got slope and separation to the downside, so the trend on the weekly is definitely to the downside. On the daily, we've challenged it. We had a nice solid downtrend. They challenged it and failed. Now they've taken it back, and we are above the 9 and the 20. And you can see this is the first time 3 consecutive days. Unfortunately, one of these days happens to be a holiday, so we have to scrub that data. But this will be the 3rd consecutive day if we have gains to the upside. So we can see that the downward trend has been challenged on the daily. On the 4-hour, you can see that we have a nice strong upward trend on the 4-hour, and we've created ourselves a little bit of a tech gap against the 9 EMA right now. A close of the tech gap will bring us back to that 1890, the magnet again. We do have a naked cross right here on the 4-hour. You want to pay attention to these naked crosses. Although this one is on the 4-hour, it doesn't necessarily have to be filled. Just always have to put these naked crosses in context. I usually look at the 5 and the 15 and the 30 minute for the intraday and the larger time frames for multi-day targets if we see some weakness. So if we get below the 9 and the 20, one of the destinations I'll be looking at is the 1839 area. Going to the 1-hour, again, same thing. We've got nice strong trend, consolidation, and continuation. We've got slope and separation, although we have created a technical gap. A gap fill here will bring us down to the 1897.75, that CLVN. But we do have a nice upward trend going on the 1-hour. Same thing on the 30-minute. This looks like it's going to close the technical gap through time. Gap fill's probably going to be somewhere around 1901.50. And we do have a naked cross right here at 1888.75 on the 30-minute. So if we violate the trend, this would be a probable target down here. Going to the 15-minute, you can see that we've had a nice strong trend. It's starting to lose some separation, but we could bounce and get continuation. You can see our overnight high. Is that a week high at 575? Yeah, we have a week high at 75. Next target above us is the 750 and then the 975 CLVN. But we are seeing a little bit of weakness coming in on the 15-minute, and then on the 5-minute, you see we're getting more consolidation, but we still are above the 9 and the 20. So we can see that this upward trend is starting to weaken, and we'd be paying close attention to any break below 375 today. It's going to be a key line in the Sandforce this morning. It'll be our warning line. If we stay above it, I'm looking for a move to the 975 and possibly up into the 15. So let's take a look at the big picture. Oh, let's do the news first. So today is a Fed minutes day at 2 p.m. They'll put out the FOMC minutes. It's going to be interesting. Yellen, when she was testifying the other week, didn't sound like they were planning on doing a rate increase this Fed, but you never know. 8:30, we saw foreign security purchases in Canada. It was lower than expected. Building permits came out pretty much as anticipated. Anticipated 1.21 came out 1.2. PPI came out better than expected, and core PPI came out better than expected, and housing starts came out slightly less. 9:15, we've got capacity utilization and industrial production. So we do have news 15 minutes after the open, so be careful on this open, although these are high impact news items. Looking at the structure, the big picture. So we were talking about the fact that we had fallen out of this balance right here. This goes from January 7th, and I've included everything up until yesterday. We're back inside, so I've brought this back in. Just before we fell out of balance, these last 6 days, before we fell down and came down and tested the balance below here. The most traded price before we fell out of balance, 1905.75, basically right where we're trading. We're now back up there. We just put in a new overnight high. So we're back up inside of this value area, and this area has got a lot of undetermined fair value. So I'm expecting a lot of rotation in this area. We are going to gap up, so we have to be prepared to see a gap and go day today. And if we do see a gap and go today, the key line in the sand above us is 975. We get above 975. I'm looking for a move back up into this 1915, 1916.50 and a completion of the rule of the 10 with the move to the 975. If we fail to get above 975, I'm looking for chop in this area between the 975 and the 1890 area. 1890 is the most traded price, going all the way back to January 7th. So I don't think we're going to get away from it real quickly. A lot of auction repair that we've got to do in this territory. I am anticipating that we are going to hold the 1890 today, and we're just going to chop in this area, probably between the 1890 and the 1915, 1916 area. And the defining line for me, two of them, is going to be the 375. That'll be our warning line for a move back towards the 1800s and a test, and the 975 as a key line in the sand above, and the probability of coming up and getting stuck in this wick right here and chopping around in this upper distribution centered around that 1915, 1916 area. So we did get a neutral day yesterday. Neutral days usually begat neutral day, so I'm anticipating a rotational day, and rotational with an upside bias above 903.75, rotational day with a downside bias below 1903.75. Pretty clear cut in my mind, where the levels are going to be. So let's take a look at the overnight. So the overnight, we just put in a new high. We could continue to put in a new high coming up to test that 1909.75. Our overnight low is all the way down at 1881.50. Basically right at our midpoint from yesterday. And so far we've got 1908.75. This is a gap area. This 1907.75 was a gap that we left, I believe, on what day was it? It was on the 4th, February the 4th. So we're going to close this gap on the open. We're likely to put in a new high between here and the open. I'm going to put the high in, and we'll probably have to adjust it. And then just above it, we've got this 975 CLVN. It's on the Globex. It's the 24 hours is 1910. On the RTH, it's 975. And most of the distribution came in between the 475 and the 1900. So net inventory overnight is net long. So if we get below the 1900, I think that's going to cause pain. So I'm going to be using the LVN here at 1900 as a trade area, and an important one. I'm going to use the 375, as a as a warning line. And then I'm going to use 1900 as my key line in the sand below. And I'm going to use 1909.75 for my warning line for higher price discovery. And then targets above, I don't need this anymore, so let's get rid of this. Oh, we got to put the overnight VPOC. Overnight VPOC is 275, I'm sorry, 250. And we don't need this, so we'll get rid of that. Expand this out. So above 975, the first area that I'll be watching is this this 1150 area. And then above 1150, it's all about a move up. I've got an intermediate target here at 1350, but the key target is up here between the 1550 and the 16. And there's a little bit of resistance here at the 1800. Our daily ATR off the low of the night is 8150, right? Oh man, I lost my thought. 8150, 1881.50. Our 20-day ATR is running at 44.48. So that takes us to our daily ATR upside target at 1926. And our weekly low, if not, I shut that chart down. What's our weekly low right now? Sorry, I was late getting, I had to drive my daughter to school, so I was late getting to my desk. Is 1865 plus the weekly ATR is 75, 275. So our weekly ATR up is still at 1940 and a quarter. That doesn't change. We do have a new high at 0875, 1908.75. So based on the current overnight high, less the 20 period ATR, our downside ATR target is all the way down to 1864 and a quarter. And then our downside ATR target on the weekly takes us down to 1833. So that comes up from that 1817. $1833.50. Okay, so we got those ATRs done. Sorry I didn't have those on my chart already. Okay, so targets to the upside above 975, 1150, 1350, 1550, resistance at 18, targets after that 20. Next big resistance going to be at the 22. Let me just see if that changed. That will be this right here, so 2250. And the next key line in the sand is going to be this 33 area to 3350. 3350 is the value area high for this micro composite. So this is going to be shifted slightly up to 3350, and this is going to be our next key line in the sand. All right, and then targets above there is the weekly ATR and the next key line in the sand, which is this 41 area. And then above there, we've got target at 47 and a quarter, 49.50, and then 52 and 57. I don't think we're going to get up there today, but you never know. All right, below 1903, look for them to come down and test the overnight VPOC at 250 and test 1900. Anything below 1900, I would be targeting that 97.75. And then if we don't hold 97.75, you've got a target at 95.75. And then the range high, I'm going to use this as a slush zone between 93 and 92, because I don't want to get short until we get back inside of the value area. And then the target, obviously, is going to be the 1890, which is the most traded price, the microcomposite VPOC, and the takeout of the naked VPOC 2 ticks below at 89.50. And then we've got our close just below that at 1888.50. Once we're in this area, I'm expecting to chop around and come down and test the lower point of this distribution at the 85 and a quarter, and then below 85 and a quarter, take out the overnight low, test the 79, 78, 75 is my real target. Again, this is going to be a bit of a slush area. You want to be below that 78, 75, and below that, then I would be targeting the HVN in this distribution at 75, 75, and then the 72.50 IB low, and then our next warning line for price discovery lower is at 1170 again. And then our daily ATR, it's all about this 59 to 63 area if we get below the 1170. And then 1155 and all our targets that we had below. The next big target is down here at that 1848. That's the microcomposite value or microcomposite VPOC for this 4 days that we had broken outside of value and consolidated. So they found value at 48, then we gapped up, and now we're back inside and testing the upper side of this distribution. So that's my main hypothesis centers around the 0375 and 975. Above 90.75, rotational day with a move up into the 15, and in this distribution, below the 03, a move down to test the 1900s, and if we don't hold the 1900, a move down to the 1890 area again. So pretty straightforward. Hopefully, the rotations will be much more routine. They've been really weird lately. I got myself in a couple got on some bad sides of some rotations, and I'm going to be very tight today. I want to be patient. Remember, we are gapping up. So if we open up, let's say we open up in this 1906 area, call it 1906.75, and our close is 1888.50. 1906.75 plus 1888.50. A half gap is going to give us the 1897.75. So this area right here. Again, we got to use gap rules. We're going to have a big gap and not likely to close that gap. Less than 20% probability of closing the gap. And on the open, we've got to look for initiative buyers stepping in and possibility of an open drive. I would expect that will probably get two-sided, come down, at least test the 375, but I expect the overnight high to either be made and broke just as we're coming into the open, or sometime within the first hour of the IB being set. Take a quick look at gold. Gold has come off. It's come back. We said, we talked about this. I said I doubt we'd get away from the composite VPOC. This is the most traded price going back all the way to 2008. I didn't think that we'd get away from it too quickly, and here we are, come back. Fell out of this balance that we were in. We're below value, and we're back to the 1200. If we can't hold the 1200, look for a further move down to test the range low and the microcomposite VPOC of the area that we rallied from. They're going to probably come back here again if they can't hold the 1200s. If they can hold the 1200s, I'm expecting chop in this area and probably move today again to test 2104. I'm sorry, 1210.40. Anything above that, then I'd be looking for them to come in and fill this area right here. You can see this this area right here between the 2150 and the 32 is unauctioned territory. They're likely to come in here, start filling this in and maturing the auction up here if they can get above the value area low of the microcomposite. Other than that, I think we test the 1100s again and possibly come down to 1193.20 area. Anything below the 85, I think the shine comes off of gold for a bit, and we slowly work our way back. The next big target below is still down here in the 1155.20. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.